Welcome back to Market on Close. I'm Marley. Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. Here's some final thoughts on the session today. We did finally get some numbers for the busiest shopping days of the year from Adobe, and Cyber Monday set another all-time record with sales of $14.25 billion. That's up more than 7% year over year. The biggest discounts were seen in electronics. Those averaged about 31% off listed prices. Toys were down about 28%, and apparel with 25% reductions. Adobe says that during the peak hours of between 8 p.m. and 10 p.m. on Cyber Monday, consumers spent $16 million every minute. My guess, a lot of those parents after their kids went to bed. Now, for the full 2025 holiday season, that's November 1st all the way to New Year's Eve, online spending is estimated to be $253.4 billion, which would be up 5.3% year over year. And sticking with the shopping theme here, retail continues to shine and show the consumer is still spending. We saw positive results from American Eagle, from Macy's, and Dollar Tree in the last 24 hours. American Eagle says momentum going into the holiday quarter led them to increase their comp sales outlook to 4 times what the street was expecting. Macy's posted its strongest growth in 3 years and raised guidance amid a turnaround. And Dollar Tree gave upbeat results and raised their full-year profit outlook, saying it's appealing broadly to both its core lower-income consumer and the more affluent shopper. So it was a shopping-focused day for me. Sam, how about you?
Yeah, certainly a retail bonanza. Well, I was looking at something a little bit different, Marley. Memory names under pressure today. SanDisk, Seagate, Western Digital, all among the worst performers on the S&P 500 today at some point, while Micron shares were down over 2%. Now, it comes after Micron said it had decided to get out of its crucial consumer business, saying AI-driven growth in the data centers has led to a surge in demand. So when the largest memory maker in the US makes a big change to its business, the sector seemingly reacts. Now, Goldman Sachs also raising the price target here on Micron shares to $205 from $180 and keeping a neutral rating. The analyst highlighting how investors are likely to stay focused on the persistent undersupply in DRAM and NAND, whether the current pricing strength can continue there. Now, they say the key watch points will be durability of pricing gains, progress in HBM, and the forward gross margin path. Now, some traders also pointing to a report out of South Korea today saying that Samsung will supply half of next-gen DRAM chips needed by NVIDIA next year as part of the reason behind the weakness in the space as well. But heading into tomorrow, Marley, what will you be looking out for?
I'm going long on this retail theme, Sam. We'll get earnings from this time Dollar General. We got Dollar Tree today, and from Ulta Beauty. Dollar General expected to report EPS of 92 cents on revenue of around $10.61 billion. That would be a year-over-year increase of about 3.5% for EPS, a little over 4% for revenue. Analysts say that the remodels and a shift in consumer behavior could give the report a boost, but there are also some potential headwinds from cost pressures. Now, Dollar General may face some challenges, but it does have strategic positioning in the consumer defensive sector, and that could provide a buffer against market volatility. As for Ulta Beauty, EPS expected to decline more than 12% year over year to $4.51. Revenue estimated to come in at $2.71 billion, which would be up more than 7%. Ulta does have a strong track record of beating earnings expectations, though. Key positive factors could be strong e-commerce growth and improving customer retention or loyalty. On the flip side of that, we could see weak comp sales, margin compression, or elevated inventory or markdown signals. Those could be seen as things that could spook the street. Now, they've had some prior volatility here, but the fact that the last quarter they had a beat, it wasn't enough to sustain any sort of impressive move. So guidance and management commentary, and not just the numbers, could actually be what drives the reaction here for Ulta. Sam, what will you be taking a look at?
Well, obviously, we're going to be getting some more evidence of what's happening in the labor market when we get that Challenger jobs report at around 7:30 Eastern. So bright and early. We wouldn't typically, Marley, focus on this data print a whole lot, but it has taken on, as we've seen, a bigger role in the absence of the official data as another piece of evidence of what is happening in the slowing jobs market. Now, last month, remember, it caught a lot of attention because the rate of layoffs in October soared to the highest level in more than 20 years. years. Some of that was being put down to the company's rethinking staffing levels amid the rise of artificial intelligence, which is similar, you could say, to how technology challenged the landscape in the early 2000s. So that was really part of the conversation. Let's see what those numbers tell us tomorrow. As I said, taking on a sort of disproportionate amount of weighting in this market with not a huge amount to chew on before that next FOMC decision, Marley.
Yeah, certainly. Once that BLS report got moved to after the Fed meeting, all of these other reports took on a lot more importance. But that's going to do it for us today on Market on Close.